Ladies and gentlemen, good morning. Welcome to Bank of Jamaica's quarterly monetary policy report press conference. We are very pleased that you have joined us and grateful that we have the opportunity to meet, especially in light of the passage of Hurricane Melissa, and given that this is the last such press conference for 2026. This morning's function will follow the usual format. We will hear from Governor Richard Byles as he presents the bank's latest monetary policy decision in the context of the bank's outlook for inflation and the overall economy, against the background of the economy's performance for the last quarter. He will be supported by Senior Deputy Governor Dr. Wayne Robinson and Deputy Governors Mrs. Natalie Haynes and Dr. G.D. Lewis. After Mr. Byles' presentation, the floor will be open to allow for the question and answer segment. Mr. Byles, over to you.
Thank you, Melanie. Good morning, ladies and gentlemen, and welcome to another Bank of Jamaica quarterly monetary policy report press conference. The Jamaican society and economy have been severely impacted by Hurricane Melissa. Latest estimates indicate that the damage to critical infrastructure, including roads, houses, factories, schools, other buildings, the electricity grid, and other public and private assets amounts to approximately 8.8 billion US dollars, or more than 40% of GDP. This is a significant upward revision from the previous initial estimate of 30%. The agriculture sector has been particularly devastated, with damage estimated at approximately 389 million US dollars. Given agriculture's central role in food supply and livelihoods, this loss is far-reaching for prices, incomes, and overall economic activity. The tourism sector, particularly properties in western parishes, also sustained significant damage, with 43% of room stock closed immediately after the storm. While some less affected properties have since reopened and resumed bookings, widespread cancellations and delayed reopenings by major hotel chains will reduce tourism earnings in the near future. Already, we have received reports indicating worker layoffs. Importantly, the upward revision of the damage creates a greater risk that higher inflation could be prolonged. Beyond the immediate impact of agricultural, food, and electricity prices, the later effect of this inflation shock on the prices of other goods and services is likely to be stronger and more persistent than initially anticipated. As a result, the upside risk of the disaster on the inflation outlook is greater, meaning that inflation could be higher than forecast. It is in this context, and given the bank's primary mandate of managing inflation, that the MPC decided unanimously to 1. Continue holding the policy rate at 5.75% per annum, and 2. Remain proactive in preserving relative stability in the foreign exchange market. The decision to continue holding the policy rate at this time is largely based on 4 main factors. First, annual headline inflation will rise sharply over the next few months from the 4.4% recorded in November of this year, and will exceed the bank's inflation target range of 4 to 6% by early 2026. This rise primarily reflects the hurricane's impact on major food-producing parishes and disruptions to supply chains, particularly in energy and agriculture. These supply-side shocks lie outside the direct influence of monetary policy and therefore cannot be addressed through interest rate actions, but will have a knock-on effect on other prices. The second factor concerns core inflation. Core inflation, which excludes the prices of agricultural food items and fuel from the consumer price index, will also rise over the next 12 months, breaching the inflation target range in early 2026. This will reflect another wave of price increases for other goods and services such as home repairs, meals sold at restaurants, and personal care items. The higher core inflation will arise in the context of the anticipated surge in overall spending and economic activities related to recovery and the rebuilding efforts, supported largely by flows of external financing to the private and public sectors. The central bank is therefore positioning monetary policy to minimize such second-round effects and to constrain the inflation expectations of businesses and consumers. The third factor that figured prominently in the decision to hold the policy rate unchanged at this time is the path for the fiscal or government accounts. In the aftermath of the hurricane, the government suspended the fiscal rule for an initial period of 1 year. This will facilitate the public sector's ability to increase spending for the recovery and relief effort. For the central government, in particular, larger fiscal deficits are projected over the next 3 years, compared with previous projections. While the additional government spending is absolutely essential to rebuild the foundations of the economy following such a catastrophic event as Hurricane Melissa, the bank has to position its policy to temper any possible inflationary impulses from this increased spending. The fourth factor which the MPC considered is that the risks to inflation, the inflation outlook, are skewed strongly to the upside. This means that there is a greater likelihood of inflation exceeding projections. Higher inflation could result from higher than expected demand to support the reconstruction efforts. Inflation expectations could also rise as households and firms anticipate higher prices and adjust their behavior in ways that make higher inflation self-fulfilling. A more protracted recovery in the agriculture sector and more prolonged disruptions to its supply chains could also worsen food price increases. There could also be long-term damage to specific industries, which could slow the improvement in the production and availability of supplies. In our previous press release in November, we noted that special preemptive measures would be taken to preserve relative stability in the foreign exchange market. These measures took into consideration the need for additional foreign exchange to finance increased imports made necessary by the rehabilitation and reconstruction efforts. Consequently, since the passage of the hurricane, Bank of Jamaica has sold $250 million into the market. We have also directly supplied the foreign exchange needs of selected players in the energy sector to take large lumpy purchases out of the market, as well as we have reintroduced scheduled advance notices of intervention sales. That is to make it easier for the market to expect liquidity coming into their trades. With these actions, the exchange rate has remained stable over the period 1st of November to the middle of December 2025 compared to the end of October 2025. Cumulatively, BOJ sold US 1.1 billion via its BFIXIT facility over the 12 months to the end of November 2025, largely in line with the amount sold over the 12 months to December 2024. At the same time, net foreign exchange purchases have amounted to approximately US 1 billion over the 12 months to the end of November 2025. Going forward, the bank will continue to proactively take steps to maintain orderly conditions in the foreign exchange market, as instability in this market can fuel higher prices throughout the economy. I'll now briefly highlight some recent economic developments, starting with the latest inflation data. On the 15th of December, the Statistical Institute of Jamaica, STATIN, reported that headline inflation at November 2025 was 4.4%, which was above the bank's projections and higher than the 2.9% recorded at October 2025. The higher inflation compared with October was due mainly to higher food prices, reflecting early signs of the impact of the hurricane on raw food prices. Core inflation was 4.3% at November 2025, which was above the 3.7% recorded at October 2025. Inflation is projected to rise above the bank's target range over the next 4 quarters, peaking in the June 2026 quarter, and as supply conditions improve, along with appropriate monetary policy response, will moderate back to the target range in early 2027. The near-term macroeconomic outlook for the Jamaican economy has been adversely affected by Hurricane Melissa. The PIOJ estimates that the economy will contract in the range of 11 to 13% in the December 2025 quarter. While economic activity will contract in the immediate aftermath of the hurricane, the bank projects that the funding inflows from multilateral and private sources will support spending in the economy over the next 3 years, to the extent that the capacity exists to execute planned projects. For the financial year 2025-26, the bank anticipates a decline in real GDP in a range of -4% to -6%, largely due to the extensive damage to infrastructure and disruption to productivity activity. For financial year 2026-27, real GDP growth is projected in a range of -1% to 1%, reflecting the start of recovery efforts, which will pick up pace in ensuing years. Jamaica's external accounts are also expected to deteriorate over the near term. The current account is expected to worsen to a deficit, a major change from the surpluses recorded over the 3 prior fiscal years. The projected deficit will result primarily from a worsening in the trade deficit and lower tourism inflows, partly offset by higher remittances. In particular, exports are projected to be lower on average, primarily due to the projected fall-off in manufacturing, mining and quarrying, agriculture, and re-exports. Imports, on the other hand, are projected to be higher on average, underpinned by higher consumer goods as well as greater demand for raw materials, transport equipment, and capital goods imports. The increase in the importation of transport equipment and capital goods, of course, is related to the ongoing relief efforts and to support reconstruction thereafter. Notwithstanding the worsened external position, Jamaica's international reserves remain robust, standing at a historically high level of 6.3 billion US dollars, and that was at the middle of December 2025, representing about 151% of the measure considered to be adequate. These reserves will be buoyed by the various disaster risk financing, multilateral funding, and grant flows, including the receipt of proceeds related to the Caribbean Catastrophe Risk Insurance Facility and the Catastrophe Bond. Ladies and gentlemen, in concluding, the extensive damage from Hurricane Melissa, particularly in the western Jamaica, is expected to adversely impact the country's key macroeconomic indicators for some time to come. Against this stark backdrop, BOJ's Monetary Policy Committee reaffirms its view that preserving a stable macroeconomic environment is essential to the country's recovery and reconstruction efforts. The bank remains firmly committed to managing the inflationary effects of the hurricane, recognizing that if inflation is not tamed, every sector of the Jamaican society will be adversely impacted, especially the poor and the most vulnerable. Accordingly, the MPC will continue to keenly monitor the future impact of higher food prices on the level of overall inflation and stands ready to adjust monetary policy if the risk highlighted earlier threaten the projected return of inflation to the 4 to 6% target range in the shortest possible time frame. Thank you, and I will now take questions.
Morning, Governor. My first question is a matter of clarity, but may I also commend you on your marketing. When this goes public, I'll take three cases. I was under the impression that your target is an annual target which is set and reviewed, inflation target, which is set and reviewed every year. I note where you're saying that, or you imply that this is a fixed target because you admit that it will be breached, but I have not heard of a revised target. You're still holding to your 4 to 6%, and you're saying that it should return to that target range in early 2027. So for my edification, this 4 to 6%, is it a fixed target that is reviewed every year, or it is a fixed target going forward each year?
I don't believe it's reviewed every year, but remember it's based on generally the state of the economy, its growth prospects, its size, debt to GDP. There are a number of variables that are taken into account when that range is set. Those variables are not state of the economy, has not changed to that extent that we would expect there to be a change in that range of 4 to 6%. But I'll ask Dr. Robinson to speak more detail on that.
Thanks, Governor. Good morning, everyone, and season's greetings. Well, I don't have much more to add. It's set by the Minister of Finance, as you're aware, and it's typically set for about a period of 3 years, and then we review it after about 3 years.
All right, we have a question from Mark Gale. Go ahead, Mr. Gale.
Morning, Governor. So, according to the BOJ Amendment Act that was passed in 2020, right, Section 5 clarifies the principal mandate of the bank, right? However, subsection 4 reads, the bank shall carry out its functions with a view to achieving the principal objectives specified under subsection 1 and shall do so in a manner that recognizes the growth and employment objectives of the government. So my question to you, Governor, and to the DGs, how do the most recent MPC actions of holding rates, especially this most recent one, in light of Hurricane Melissa, how do they recognize the growth and employment objectives of the government? And I have a number of others, but I'll just stop with that one for now.
Yes, so the primary objective of the Bank of Jamaica is to target inflation and to keep it within the range that is set by the government after consideration of state of the economy and its prospects. So that's really the reason why we are here as the Bank of Jamaica. We also supervise financial institutions. Anything else is secondary to that primary mandate. However, when we look on the current situation, what we see are the prospects for inflation to rise quite dramatically. And who is going to be there to tame it if the Bank of Jamaica is not there with its monetary policy? We can't have a recovery without hurting a lot of people if inflation gets up into double digits and stays up there for a prolonged period of time. So the balance and the choice that we have to make is this. Given that our primary mandate is inflation targeting, given that if inflation gets out of hand and becomes more difficult to bring down, and that it affects the poor in this country and the most vulnerable, would we put as secondary the issue of economic growth and focus on inflation targeted? And the decision is yes, we will put the inflation targeting as our primary mandate. Now recall that monetary policy is not the only impulse that would drive economic recovery. A lot of that impulse is going to come from the flows of assistance that we are getting from abroad, as well as insurance flows to the private sector and to the public sector. So we are going to have to digest, implement all the projects that have been are going to be funded by these flows. And that's a tremendous impulse to growth in the economy. So when the choices are made, we feel let us defend inflation. There are a lot of flows that are coming that are going to drive growth. Wayne?
And I would just add to that, you know, if you think back to Jamaica's history, and certainly looking at a number of other countries, you will see that countries can't grow on any sustained basis over time if inflation is rampant and if inflation is out of control. That is why for the central bank, and almost every central bank you'll come across, controlling inflation becomes a primary mandate, because underpinning any economic growth on a sustained basis is macroeconomic stability. And a core part of that macroeconomic stability is low and stable and predictable inflation. Otherwise, people won't invest, people can't plan, people won't save, because they just don't know what will happen to prices tomorrow.
Okay, Siobhan Campbell, would you like to go ahead?
Good morning. Can you hear me?
Yes, we can.
Good morning, Governor. Two questions. The first is in relation to the concerns about the ability for the country to essentially take advantage of the large influx of foreign assistance that is coming. We do not exactly have a good track record in terms of the expenditure of the capital on the capital side. I think up to the last 4 budget cycles, about $20 billion has been under-expended. What impact could this have overall in terms of the recovery trajectory?
Yeah, that's a really good point. Many years we do not meet our capital budget. We underspend it. A big part of that reason, I must say, is the process of procurement in central government is particularly onerous. For historic reasons, that's a system that exists there. the establishment, what is the agency called? NERA? NARA. I think it's NARA. The establishment of NARA is intended to address that procurement issue. That's my understanding. But you are correct. If all this money sits in Jamaica and is not spent, it means that the recovery will be much slower. I personally, if I could just express a view, when I look at the reestablishment of electricity, I believe the last number I heard was 80-something%. I find that quite commendable. And that was possible, it seems to me, as a Jamaican was driving around the countryside, because there were a lot of linesmen and equipment that came into Jamaica and worked with JPS to reestablish all of those poles blown down. And I think that is a kind of model for us for reconstruction generally. It is going to be very difficult for us alone, in the best of circumstances, to rebuild what has been destroyed in a year, 2 years, even 3 years. Very difficult for us to do it. As you say, the capacity to actually do it. And so I think that getting assistance from abroad may cost us something, but I think working alongside Jamaican skills in the construction, road building sectors, we will get the job done quicker. And very well too, I think, judging from what I've seen happen with the electricity reconstruction.
Good morning, Governor. Governor, can you give us a little update on how the transition is going from JamClear RTGS system to the ISO 20022, and how will it help deposit-taking institutions?
Good morning.
Morning.
Thank you, Al. Okay, so that transition was effective last Monday, the 15th of December.
Yeah.
It was targeted for end November, but we had to delay because some of the banks were not ready. All the banks now have transitioned. Last week, some beyond December 15th, but by today, all have transitioned. And some institutions are still having difficulties in terms of, not because of the ISO transition, but some of them had implemented a payment platform to support the ISO 222. So that is some performance issues there, but we are working with the banks through that. So, and the banks, it should be, for the ISO international standard in terms of standardizing payments, more efficient in terms of payments.
Good morning, David Rose here. So just two questions with respect to payments. So the first one, recently the BOJ's Jamdex stock could have gone from about 268 million to about 270 million. Currently speaking, we still only have two Jamdex wallets in the public domain at the moment. So the first query is, is the increase in Jamdex allocation related to the entrance of another party to this space? And the second question is, with respect to the introduction of other participants, what is that looking like at this moment, especially in light of what we've seen with Hurricane Melissa and the need to have decentralized payment opportunities in this environment?
Thank you, David. Good to see you. Okay, so that increase in the circulation of Jamdex was a new participant entering the space, but they are not fully ready. While we can, remember Jamdex has two components. One, for us to be able to issue and redeem digital currency with the banks. That works. And then now to roll out their wallets to the public. So one institution, we issued that additional tool, and they are still fine-tuning technical details before they roll out their wallet to the public. So we still only have 2 operators, as you say. We were expecting 2 more to come on before year end, but of course Melissa happened, and so we are looking for those persons to come on, the last 2, by Q1 next year.
And a second query then. So we would have seen the impact to the ATMs and, you know, just the reality post Melissa. So first query, with respect to the redemption of the old banknotes, what has that redemption cycle looked like in terms of what you would have had in circulation vis-a-vis what you have redeemed so far? That's the first part. And the second part is, I recall in the past, there was a story that the BOJ was intending to design a new format for the banknotes. I'm not sure where that project is, but the reason I ask this question is because sometimes when you go to ATMs, the $5,000 notes, the new ones, are being rejected a lot by the different banks, ATM systems.
All right, so you asked about 3 questions there. So, so the first one, the redemption of the cotton notes, that's being done now by Bank of Jamaica. I mean, some banks still may, I think NCB still takes it, but we are saying now we are about roughly, in terms of value of currency in circulation, roughly looking at about 4%. So it's not, I mean, and you have some normal, even with the $2 banknotes, there are still $2 banknotes out there in circulation. So there's some normal level that we expect to remain out there for posterity reasons. People hold it as souvenirs and so. So that's going well. The other question you meant design.
But it was about the redesign.
Yeah, it's not a redesign per se, David. What happened when we introduced new banknotes? It coincided with Jamaica's 60th anniversary. So to commemorate that, we had the 60th anniversary logo on the banknote. What we're seeking to do now is remove it. However, some banks indicate that their ATMs and their other processing machines, they have to kind of tweak it, because they were reading it as a feature. It's not a feature. It's not a security feature of the banknote. So that's what we're working with them to do. You had a third question though in there now?
It was with respect to the ATMs.
I don't know why it's rejecting it, because all the banknotes basically have, especially the high value, have the same features. So if the ATM is reading the 1,000 and 2,000, it should be reading that 5,000. I don't know what is the problem there.
I had a question before, but let me go to this one. I remember last time we were here, we got some numbers about the operability of ABMs. I have been trying and having grave difficulty about getting or finding machines that are working. And it begs the question, the data that BOJ gets, I'm assuming you get this data from the banks, are they independently verified? Because I have some questions with the data.
Okay, so I think we have to start from recognizing that a person's individual experience of ABM functionality might differ from when you look at the country overall, because we have over 850 installed ABMs operational, and this is certainly pre-Melissa. So most of what I'll be saying is pre-Melissa, because of course we would have had a major shock to the system. So in terms of the availability and the robustness of the numbers, we get the reports from the DTIs. They attest to the accuracy of the information. We also have secondary information that comes from the JETS system, which helps to corroborate the information that we're receiving. Standard to every data point that we receive from financial institutions, we also look at trend analysis. So we look at the data over time, and if there are inconsistencies or what may appear to be discrepancies in the data series, we do have conversations with them to understand that, and there are periods of times where they resubmit information to us. Prior to the impact of Melissa, there was a a work stream where we're going to do requests for institutions to do at their own cost reviews, independent reviews of their ABM performance. We have pushed back on that because most banks are now focusing on trying to get their network up and running. But that's certainly something that we intend to pursue at some point next year. So what that would look like is essentially having an independent third party look at their reports and validate that the numbers that they are issuing are consistent and verified. But again, that will still be a sample of the information set. So the framework I've described is consistent with every other data set that the central bank receives. So whether it's a balance sheet, P&L, whether it's information about interest rates, it's the same process. And banks are very clearly aware that misreporting to the central bank is not a trivial thing. The Banking Services Act has penalties associated with misinformation being sent or distributed, and designated officers at the financial institution have to sign off to say that these numbers are correct. So I'm basically trying to say that the reporting for ABM uptime and any other statistics follows the same rubric that is followed by a financial institution that's licensed by the Bank of Jamaica. And if there are discrepancies and they are not justifiable explanations for those discrepancies, there are penalties that follow. And I think all banks are aware of that.
Thanks for the explanation, but I might add that I'm also in the space where these complaints are made. So it's not just my personal opinion, but complaints that have come in. My substantive question, though, Governor, have the BOJ recently provided some edict regarding the directorship of FHC vis-a-vis affiliate or associated companies? I ask the question because a banking institution recently published a statement indicating that they had to adjust the composition of their FHC vis-a-vis associated companies subsidiary as a result of the FHC license being approved or application being approved.
I'm going to ask Jide to deal with the FHC issue, but let me just add something to your question about ABMs. We have been having these press conferences now for years, and we have fielded this issue of the ABM machine problem from the very beginning. The solution is to go to more digital payments, and that is what Jamdex is designed to do and what we have been struggling with for years to get done. Jamaica lives on cash too much, and you know it's bad now, but I can tell you next year this time it's going to be even worse unless we get off of this diet of cash, and the way to do it is through Jamdex. So believe you me, Natalie, myself, Wayne, the entire BOJ is going to be pressing relentlessly to get the POS machines in the banks converted to take Jamdex so that we can market Jamdex in a massive way and get more and more Jamaicans to use it instead of cash. Jide.
All right, thank you very much for that question in terms of governance. So Bank of Jamaica would have issued a document, Standard of Sound Practice on sound governance of financial institutions in November of this year, following a period of consultation with the industry. This document is going to govern both banks and financial holding companies. And so the specific matter to which that institution is referring to has to do with a provision in that standard that says that we want to reduce the level of overlaps between boards across groups. And the idea behind that particular principle is that you want each board for each financial institution within a group to be independent and to think independently about its own mandate. You don't want conflicts of interest. So you want the bank and the board of the bank to be focused on, making profits, meeting customer needs, but most importantly, protecting depositors. And you want the board of the financial holding company to be focused on looking at risks across the group, making sure that different subsidiaries have the liquidity they need, capital being reallocated. And so if you have the boards being roughly the same, then you don't have that independent, what we call constructive tension between boards. And that constructive tension is what serves a public good, because a board member at the level of a bank can push back at the board at the FHC level and vice versa concerning its priorities to make sure that there's a fair balance and trade-off between those decision making. You can't achieve that if the same board member is sitting at the FHC and at the bank. It just won't happen. You can't take off one part of your brain and keep it constant. So we want a fair degree of separation. It won't be perfect because we're a fairly small jurisdiction, but we're basically written to them to say we want them to begin to adjust so that you have those contending views. And we look at those board minutes to see that that is prevailing.
Under that guideline, do you have a ratio of directors vis-a-vis non-independent directors? Sorry. What the term them use? Independent directors vis-a-vis directors.
All right, so where we are now, and we are really constrained by what is in the Banking Services Act. Currently, a third of the board members need to be independent. But under the standard, we're encouraging boards to actually be a little bit more conservative than that. And so we have said, they can move that ratio up to perhaps even 2/3 of the boards being independent. So we're in that discussion. That, of course, is not something that we can mandate, but we think it's good practice as they move towards that particular goal.
Governor, we've had some seismic news in the financial sector over the last week or so. No doubt you would have heard about Sagicor, Cornerstone and Proven. I was reminded of a meeting we held earlier where you talked about having choice in the sector. You could go across the road, and if one bank isn't doing what you suppose it should be doing, you could always have an option to go to another bank. What are your thoughts of this seeming consolidation taking place? What do you make of it?
Well, I mean, generally, I think that it's inevitable that there will be an impetus for institutions to try to grow. And if they can't grow organically, then they're going to grow by acquisition. Looking specifically at the two examples that you raised, the Sagicor conglomeration that is planned to happen, it doesn't really affect Jamaica. They have a bank, and that bank is not being merged with any other bank here. They have an insurance business and other businesses, which the rest of the Caribbean has similar businesses, and those may be merged. So from our point of view at the Bank of Jamaica, the bank remains as it is. There's no change in that consolidation that Sagicor has done. We do have a view down the road when Twin Peaks is actually implemented, because we will then have responsibility for the non-banking side of their activities. And that is where they are larger. So they are larger in non-banking, both in Jamaica as well as in the rest of the Caribbean territories. So we will work along with the FSC to see what guardrails we should be instituting, or if there are any concerns that they have that we should be aware of. The Proven Cornerstone deal, as I understand it, and remember, again, this is not a bank. is that Cornerstone will take some ownership in Proven Management Company. And because they have a lot of undeveloped property, that is Cornerstone, and because Proven has launched a number of, I think, quite successful real estate projects, they see a synergy there. And they are hoping that that consolidation will allow them to release value from their real estate that has not yet been developed. But as I say, no bank is involved there, and so there's no loss of choice in banking by those two consolidations.
Just a follow-up question, Governor. Can you give us a little update regarding Twin Peaks and where we're going with that?
Well, we continue doing what we have been doing over the years. We've worked relentlessly on getting a submission draft to Cabinet. So this is a submission that will outline in ordinary language what Twin Peaks is about, what it's trying to achieve, and how it will go about that. But we have to be taking into account a lot of views from not just Bank of Jamaica and FSC, but many other government enterprises, which GDR Wayne can give you a better idea of. And so that has taken us quite a while to get all of the comments in and any differences of opinion to get those cleared up. We are now on the verge, we have, I believe, Wayne can update me on that, submitted to the Cabinet. After that begins the process of drafting the legislation. And after that, it goes to House of Representatives and Senate. So we are quite away from having it implemented. In the meanwhile, though, we are practicing, meaning that the FSC and ourselves share a lot of information and insights into each of our portfolios. And we even do on-site inspections together. So I would say Bank of Jamaica and FSC has a much better picture of the total financial sector today than we did 2 or 3 years ago. And we hope to continue that in the future.
Yeah, just to clarify, so the Minister of Finance is currently finalizing the Cabinet submission. As the Governor indicated, that represents a culmination of a long period of extended reviews by different agencies of the government. So it's now up to the ministry in terms of the timelines going forward as it relates to Cabinet submission and approval and the issuing of drafting instructions. But whilst all of that has been happening, as the Governor indicated, we have been doing quite a number of other things as well. We have been looking at the institutional preparation for that, for both the Bank of Jamaica and the FSC. One of the things we're actually working on is the development of a technology platform that can serve both Bank of Jamaica and the FSC, as well as the licensees, in executing their supervisory functions. We think that this is critical as it will drive a lot more inefficiencies in the supervisory process, as well as it will reduce the cost of supervision to all our stakeholders. We also continue to have discussions and consultations with the various industry, as well as we seek to craft both the legislative framework as well as the operational framework. So work is progressing.
Go ahead, David.
Thanks. I guess this fault goes to you, Sir Lewis. So we know that Basel III has been under discussion for some time, and as Governor Biles spoke a while ago, these developments have to go through Cabinet. So with respect to Basel III and even the implementation of the 2 buffers, where are we at this moment?
Thank you for that question. So in terms of Basel III implementation, we are still on a journey. We have, I think, far gone in terms of consultation with the industry. And we have actually made amendments to that particular set of proposals to introduce Pillar 1 of the Basel III framework. We have, for example, made adjustments in terms of the recognition of technology investments, where they don't have to write off the full amount of that investment one-off, but they can amortize it over a 2 to 3 year period. We have also made other adjustments in terms of recognition of the sort of risk weights that they have to apply for certain loans, particularly to the SME sector, households, mortgages. So those discussions, I think, have been quite fruitful. Where we are now is wrapping up our recommendations for drafting instructions. We haven't finalized that, but I would say we're 95% of the way there. And so within the first quarter of next year, we anticipate that we would be submitting that to the Ministry of Finance for their consideration. Typically, regulations and the passage of regulations through that approval process is not as lengthy as for primary legislation. So we don't anticipate that that would be too much of a prolonged process. But again, that is something that is outside of the control of the central bank. So we're going to be focusing on making sure that the recommendations for drafting instructions leaves us within the first quarter of 2026. I want to just say, though, that in the meantime, the banks have been doing dual reporting. So they have been reporting to us on their capital based on the Basel I standard and the Basel III. And all banks meet and are compliant with both Basel I and Basel III. So we're not anticipating any cliff effects when that regulation comes into force, because they have already embedded all of those accounting standards, all of those, all the technology in terms of reporting, all of those are in place. And so once it's promulgated, we expect a very smooth transition that will redound to the safety and soundness of the banking system.
Just two follow-ups then. So with respect to FHCs, you mentioned governance a while ago.
No, everything I said was in relation to banks.
No, basically.
Yes,
but with respect to it was FHC governance earlier, and when the CEOs of the financial sector said that they're looking to introduce LCR ratios of FHCs as well. I know that the FHC structure and just the process has been relatively fast-tracked and new for the BOJ, because you've introduced governance, LCR, double leverage ratios. So in terms of the totality, where is the BOJ stand in terms of further what I call recommendations to the financial sector with respect to FHCs? And then the other question is with respect to the shot from Melissa. Does the BOJ anticipate, based on incoming data over the next couple of months, that to potentially implement any capital restrictions on dividends, for example, by FHCs or banks?
Okay, two separate questions. So let's focus on the first one, which is about financial holding companies. We haven't built out the regulatory framework for financial holding companies at this point. That's something that we are going to be focusing on come 2026. Our focus for the last few years has been licensing, and we have licensed 7 of the 8 financial holding companies in Jamaica, or that have head offices in Jamaica. So we'll be transitioning. What one can anticipate for the regulatory framework for financial holding companies are capital requirements and liquidity requirements. For capital requirements, it's essentially going to be consolidating the capital that they already have across their subsidiaries and accounting for it, consolidating, taking out intragroup transactions and seeing what is remaining, and then requiring them to hold a certain buffer at the financial holding company or the consolidated balance sheet to be able to absorb shocks. So that's on the capital side. Liquidity, we're going to be focusing on liquidity particularly for the banking subsidiaries and the security dealing subsidiaries, particularly where they have a large on-balance sheet business. We'd expect them to have enough liquidity on hand to meet redemptions. And so that's what that framework would look like. As usual, we will consult with the industry. As usual, we will take on whatever comments that we think are substantive. And we know that with groups, we have to be careful. We can't treat, for example, an insurance subsidiary the same as you treat a banking subsidiary. So all of those considerations will be brought and put forward, and we'll hopefully come out with something that's fit for purpose and that causes the overall sector to be strong. So that's in terms of financial holding companies. A lot of work to be done where that is concerned. In terms of the impact of Melissa on the financial system, and I'll focus on the banks. So we are anticipating that there will be deterioration in terms of the credit quality of their portfolios. Fortunately, the bank system entered into this episode, this shock, with very low NPLs. About 2.7% of NPLs were non-performing as at October 27th, or the day before Melissa. We're anticipating that over the next 4 to 5 quarters, we'll see an increase that may double. Now, the threshold for that we become concerned about is 10%. And so you look very shocked. So this is more like globally, prudential supervisors become concerned about non-performing loans at about 10% of the portfolio. So doubling, call it 3%, we are anticipating that NPLs will rise to about 6%. As you can see, that's still going to be some way below that 10% threshold where there is a concern. We have looked at it both at the level of the system as well as individual DTIs, and we actually believe that they are well positioned not to just survive this particular shock, but actually to continue to lend to the private sector, lend to households even as they go through this shock. And that's because their provisions are high. For every dollar of non-performing loans, they have a dollar of funds reserved to be able to pay off and write down that loss. They also have buffer capital, as you mentioned earlier. The system was at about 14.5%, so they were 4.5 percentage points above the 10% minimum. And banks were profitable going into this particular shock. So we are actually seeing that the banking system will be able to be counter-cyclical in this shock, which means that rather than holding back on lending, holding back on dividend payments, holding back on other parts of their investment portfolio, they'll actually be able to grow and increase their balance sheet without incurring additional risks. And so, yes, there'll be deteriorations, but there'll be deteriorations which their risk management functions are expected to manage through and allow them to continue to operate. So I hope that kind of paints the picture for you.
Governor, earlier we saw the Federal Reserve drop the policy rate by a 1/4 percentage point, but it seemed to descend into a lot of controversy vis-a-vis the president. We see the president almost strong-arming the chairman of the Federal Reserve. I'm no doubt sure you've seen the comments by the president, but as a central banker, what do you make of that, and what do you make of the impact on the Federal Reserve with the president breathing down your neck?
No comment on that. I don't have a
Not
view on
as a
that.
central banker?
No, I can't express a view on that.
Let me put it another way. How
How
would you feel in that circumstances yourself in Jamaica if you were subject to that kind of thinking
I think the answer
or
is-
action?
I think the answer is obvious, that a central bank that's independent is expected to have an independent view and make decisions independent of the political directorate. So to the extent that that is being defeated, any reasonable person would be concerned about that.
Deputy Governor Lewis, something just struck me actually looking at a list of the number of FHCs, and there are 6. Okay, 6. My question though, has that Ace Company applied for FHE license? And if so, what's the holdup if there's one?
All right, so as a rule, we don't discuss individual applications. That's because typically the information that's being passed from an applicant to the central bank contains material non-public information. What we can say, though, is that all eligible persons who are required to apply have applied. We can say that that application process is iterative, as in all applications, whether it's application for a new product, whether it's application for a new license. There are going to be submissions, we're going to review and then revert. There'll be further clarifications if necessary. The decision-making rubric of the BOJ would be that it would go to the supervisory committee of the central bank. That's a statutory committee that has the remit of making the decision as to whether or not a license would be granted. And typically that process lasts for about maybe 3 to 6 months. So one can anticipate that within that timeline, that applicant, speaking generally, that applicant would either hear that they have been approved with conditions, they have been approved without conditions, or their application has been rejected.
Speaking generally, has there been a holdup in this application?
I cannot comment on a specific application. I can say that there may be need for further information during an application process, where we do write to them to indicate that additional information is needed. We do stipulate a timeline. The bank has an SLA with applicants, so we have an obligation to respond to them within a particular timeline, and those results are published on our website. So far, the central bank is doing a fair job. There's still room for improvement. So that's a general response to that query.
We have 2 questions online, Durand. Siobhan, please go ahead.
Good morning again. My question was alluded to just a bit earlier, but I think I'm going to bring it more close to Jamaica. With the U.S. Federal Reserve again cutting interest rates and an expectation that there may be more U.S. rate cuts going into 2026, is there a concern, and I recognize that the bank is in a bit of a bind under the circumstances, but is there a concern that with our rate staying unchanged and the US rate continuing to go down, that there could be a long-term impact on us, particularly in terms of foreign exchange, especially in a context where our own primary driver of foreign exchange, that being tourism, is not exactly in a position to carry that burden?
I don't think there's a negative impact from our rates being higher than the US rates. In fact, generally speaking, our rates have been higher than the US, and by sometimes 2%, 2.5%. So we're pretty much just getting back to that point where our rates are a little bit higher in a comfortable way over theirs. The fact that our rate is 5.75, I don't think impacts tourism in any way, or investors in Jamaica in any way. And it doesn't impact the flow of foreign exchange into the market. So I don't think there are any risk involved there.
Mark Gale, would you like to go ahead?
Sure, thank you. So, Governor, no one can, well, in an intellectually honest way at least, challenge the BOJ's commitment to the principal mandate of fighting inflation, right? But if by your own projections, you're expecting inflation to return to the target range in the next 12 to 18 months, and if the monetary transmission mechanism is still 12 months or greater, how does holding rates now help fight a short-term spike in inflation? In other words, what is the risk that the MPC's cautionary stance has an inordinate drag on growth without affecting the short-term spike in inflation, with inflation expected to return to the target band anyway?
we expect inflation to return to the target band, but with the assistance of monetary policy. So there's a difference between maintaining the 5 3/4, which we are, and dropping it. I think you can appreciate that. And by maintaining it, what we're doing is maintaining the status quo. If we dropped it, we don't think that the inflation would return to the corridor in the time period that we expect. That really is the answer to your question. You know, by maintaining, we are in fact maintaining tightness and helping inflation to return. Wayne, you want to
Governor?
I mean, you ask about what are the risks or what are the things we're concerned about. Well, primarily we're concerned about the second round effects. I mean, we all know that, of course, you know, monetary policy can't affect, you know, the initial shock, the initial increase in tomato prices or the prices of carrots. But what we have to focus on is how does this shock translate to other parts of the basket, to other goods that consumers actually purchase. So for example, household maintenance services, for example, personal care items, for example. And we're actually seeing some of that second round effects happening. And so that is what we're trying to actually lean against, because if these second round effects take hold, then we won't have the reversion to the target range that we are actually forecasting in the early part of 2027.
Governor, recently we see that Moody's has upgraded Jamaica to BA3. What are your thoughts?
Well deserved.
And
no, I mean, seriously, I know everybody agrees with me. We have fought, that is Jamaica, as a country, an economy, as a people. We have fought very hard over the last 10, 11, 12 years to achieve that, and it's remarkable. Let me tell you something. In international circles, I don't believe there is any other country that is as well respected as Jamaica. Whether it is with the IMF, the World Bank, the IDB, wherever, United Nations Development Program, anywhere, they think so highly of Jamaica. And we have achieved that through sacrifice and hard work and focus over the last 10 and 12 years. Melissa really has come at a time when we were just about to reap the benefits of all of that hard work, where we could have spent more on the capital side without borrowing, where we could have been a little more relaxed in our monetary policy. Melissa came just at the time to, in a way, box that away from us. Terrible tragedy, in a way.
And final query. So I believe it was with respect to the BOJ's 2024 Financial Stability Report, there was mention of the non-bank financial groups on the FSC side, you know, in terms of those financial groups which do have a DTI but have some relative size in the space. So, Governor Lewis, could you give any context, you know, with respect to the non-bank financial groups that was mentioned on that sphere, you know, that would fall on the FSC side?
Okay, so let's put it into context. The financial groups that contain a bank cover 93 or so % of all financial system assets. So for groups, financial groups that do not contain a bank, it will be the delta, it will be 7% of all financial assets. So you do have those groups. I won't name them. You know, I would leave that for the FSC to name them. What has been done legislatively, though, is that the authority has been granted to the FSC to supervise those groups on a consolidated basis. And so, therefore, between BOJ and the FSC together, all financial groups, whether or not they contain a bank, would be under some supervisory oversight from a group-wide perspective. If you're to go back to what the governor would have said earlier in the press conference, to the extent that we are practicing, Twin Peaks practicing and doing joint examinations, it means that the sort of the oversight and clarity around the various groups in Jamaica is that much stronger. And I think that certainly is a positive development.
Thank you, Dr. Lewis. The final question goes to Luke Douglas online. He's asking Mr. Biles to comment on the likely impact on benchmark rates if the full recovery of electricity supply post-Hurricane Melissa happens at the end of January as compared to as far as April. Could the governor comment on the likely impact on benchmark rates on whether the full recovery of electricity supply post-Melissa happens at the end of January as compared to the end of April?
Well, I don't think it will affect any of our rates, but we'd certainly welcome it. I know people in Western Jamaica would be very happy.
Okay, that's the final question. Would you like to any closing remarks?
Just to say Merry Christmas to everybody. My BOJ colleagues who are here, as well as members of the press. It's been a tumultuous year. We had some highs and we've had some lows. And it's been great working along with you in the press, both who are here as well as who are online. So have a great time, but be safe and see you back here again about February, about February. All right, guys.